Like this. Hello to everybody. So I think it's time to start because I don't know whether we'll be entitled to go a little bit ahead because it was foreseen 1 hour and a half, but we're starting a little bit later. So first of all, thank you to everybody to participate. I recognize some faces that were here with me in October last year when I was myself a newcomer because I just joined the CAS a year and a half ago. And we go immediately to the main core business. So allowed me to introduce myself, Marina Zanchi, the head of the Common Audit Service, a newcomer, my new deputy, Mr. Stammatis Antis, is a deputy head of unit and an auditor by profession and background. And thanks, now I don't see what it is, the rapporteur, I forgot, coming from Accountancy Europe, Sandro Galea. Looks Italian, but it's Maltese, I guess. And my colleague, Sorin Serban, who is the shadow rapporteur, and thank you very much for helping us because they will gather and consolidate our output of this meeting and present to the plenary. So the idea is to go through a very quick presentation which will tackle a little bit ex ante and ex post audit because we want to have an entire overview, but it is not our main core business of today. It will be quick. It will just useful to put in the context. And then we are here in the listening mode because we really, really need your help and concrete ideas because we have to implement quickly. We start into the 2020, which is tomorrow. You know, time is flying. So this is the table of content. I will briefly, both of us will present, Stammatis and myself. Ex ante control, a general overview, what do we mean, what it is, and then ex post control, which is the main mandate of the CAS, and the future, system and process audit and cross-reliance of audits, which is exactly what we should talk on afterwards and listen to you. So I give the floor to my colleague, so please.
Thank you very much, Marina. Good morning, everybody. So to start with the presentation, we will go briefly on ex ante controls. Then we will follow with ex post controls. So on ex ante controls, just to the general framework, let's say, ex ante controls, we mean all the controls that the Commission is performing before a payment is taking place, while with ex post, we mean those controls that take place after a payment is taking place, normally by auditors. It was mentioned in the plenary this morning, either by auditors of the Common Audit Service or by outsourced auditors. So the general framework, in general, as you know, in the Commission, authorizing officers have to put in place internal control systems that are suited to the performance of their functions. So already we see as a general requirement, which comes from the financial regulation, the internal control system needs to be suited to the performance of the function. So one size fits all is not something that we consider appropriate. And of course, authorizing officers must ensure equal treatment for all beneficiaries. This is something particularly important for research projects, but it goes long way, let's say, beyond research. It's something general. Now, to move on, the internal control systems that the Commission has to set up need to be cost-effective. This is an important element that we do take into account. In the plenary this morning, Anna talked about the reduction of ex ante controls and the focus on ex post controls. And this is something that we really have in mind. We know that ex ante controls take a lot of resources, not only from the Commission, but also from the beneficiaries. And this is the main reason that in Horizon 2020, we tried to limit the burden of ex ante controls to the beneficiaries to an extent that we considered appropriate. The intensity and the frequency of the controls are decided by management. And again, here, one size fits all is not what the Commission is doing. There is a lot of thinking process before in tailor-making, let's say, controls based on the particular environment. If we move on, The main principles of ex-ante controls is a balance between trust and control. It's very important to note that the Commission trusts the beneficiaries, trusts you, that your systems are able to prevent and detect error, and that the financial statements that you submit are, as to an extent possible, error-free. And that's why, if we have this assumption of trust, we wouldn't need to go into details. At the same time, the Commission ought to control, to ensure that the financial statements are indeed error-free. So what we are striking here is to have an appropriate balance between trust and control, keeping in mind that we need to minimize the burden to the beneficiaries and ensure equal treatment. How do we do it? So at ex-ante level in Horizon 2020, we requested limited information from you in order to ensure that you don't spend too much time in reporting, but you focus the energy in implementing the project, which is the reason of the funding. And at the same time, we do take into account risk considerations, and in areas that we consider that they are riskier, or areas that we consider from past experience that they are more prone to error, we may ask at ex-ante level for additional documentation or justification. So to sum it up very, very quickly, the main principle is that ex-ante controls are risk-based, are trust-based, and are also risk-based. And they focus on if the work has been done, as described in the periodic reports, if the reported effort and the use of resources is reasonable and is in accordance with the plan, and there's sufficient explanation and justification in case of deviations. So all in all, a risk analysis is part of the standard checks that we are doing, and deeper external control is carried out only when we have identified, let's say, particular risks. So that's sum ups in a nutshell ex-ante controls, and I pass the floor to Marina, who will introduce ex post.
Ex post, thank you. So next, ex post control. The principle, as our Wolfgang Burger and Anna was repeating, we are in line with the continuity and with the reassuring the beneficiaries that the main principle of trust is valid, ex-ante is valid as well, ex post, the trust between the control and the trust in the beneficiary, but as well we are working on the legality and, as you were mentioning in your presentation, and regularity on the transactions. Therefore, ex post control, currently in Horizon 2020, but the main principle on transposed for the future Horizon Europe. What do we check? We check the legality and regularity of the transaction. We check that the costs are effectively incurred and following the rules, which means that the costs declared by the beneficiaries are eligible. And that will not change in Horizon Europe, and it was the same in the past framework program and in the current one. And what the auditors do, they do an in-depth analysis of the cost claimed in order to make sure that they are supported correctly and they are reliable. However, the checks and the controls done ex post should be and must be totally independent from the ex-ante controls. And this will remain, this independence between the two. Next, please. Thank you. Now, it's in line with the continuity in the past framework programs and in the current one, but it will be kept in the future Horizon Europe. Our control, the control of the auditors, are referring to beneficiaries, so they are done at beneficiary level. And the criteria on which they are done are the ones stated here, the statistical samples, risk-based sample, and additional sample. What does it mean? We work on the basis of the common representative samples, and therefore the MUS, the monetary unit sample, which constitute the main sampling of the CAS, but they are complemented, for obviously reason, by risk-based sample, and these are criteria that are settled at the beginning of the framework program. In this case, now in Horizon Europe, we work, for example, with the top beneficiaries. What we believe constitute risk, which is the top beneficiaries, the newcomers, is a case. It is a case also for SMEs, but it's matter for discussion. But the idea, the principle of risk-based sample remains stable. Now, what constitutes risk can vary depending on the different rules and depending on the changes in life and in the situation. We provide a service as well for other stakeholders, which are the JUs, which are specific agencies. And for their specificity, we have local sample or additional samples for the JUs, for REA, and for ERSEA. And all together constitute the strategy for Horizon 2020. It will be, we have to decide together as well, the strategy for Horizon Europe. I repeat, to keep main principles stable, to keep continuity, but to see where there is space for simplification and to alleviate we spoke already many times today, the burden for all beneficiaries, more for some SMEs, but as some colleagues were saying, not only. And then the quality of the audits, which is last in this list, but not last, on the contrary, very top of our worries or of our preoccupation in the CAS, because the quantity is important, what we check is important, but above all, I would say the quality of the audits. So this for us is still fundamental for the future, the quality of audits. Now, going into the legal basis of the future of Horizon Europe. There are concepts, there are principles which exist already in the present, but they are not, we don't make much use of that. And I'm referring to the cross-reliance. Cross-reliance is foreseen in Recital 52 of the rules of participation, but it's also foreseen in Article 127 of the rules of participation, because the principle per se is not a novelty, but it was not used too much for obvious reason, I think, because there are many factors, and we will speak of it, because the cross-reliance will be one of the two pillars we want to address the discussion this afternoon. That, of course, will give a major help for having less burden, because if you have an audit on one program, and if the rules of eligibility are similar, we don't have to audit a second time. So that's a very important principle, and how to use better it, we need your help as well afterwards. And this is just the article to make reference as well to the system and process audit, the second pillar of our discussion, and then maybe you can turn to the other article, which is paragraph 3 of the current paragraph 3 of Article 48 of the current proposal for Horizon Europe rules of participation, where we are mentioning for the first time to make the best use of the so-called SPA, system and process audit, in conjunction, complemented with audit on transaction. I think we were talking several times of this. What does it mean? We will go into details afterwards. Means that it's a sort of ex ante in a way. We go to, and then it's up to decide to whom, because it's on voluntary basis. Let's think a big beneficiary who has a system in place, because otherwise it doesn't make sense. But to check whether this system is for us reliable and it gives sufficient guarantee of the legality of the transaction. We check it by checking and test it by testing some transaction, some cost, thank you, declaration. And if the commission's auditors or whatever else, and should be discussed, that's why I stay vague, because we have the principle, but now we have to discuss how to implement. At the end, decides that it's reliable, it's a sort of certification, or I don't know how to call it, because I'm very hesitant, because we'll discuss afterwards. But if it is the case, it will have stronger consequences of the numbers of audit we need to do on that beneficiary during the life of the program, and on the scope of the audits. So there is an impact, positive impact, which could be reduction in the number of audits and reduction in the burden or the scope of the further audit once there is an okay, let's say, that the system is correct in place. And for this, there is a specific paragraph in Article 48, which is cover all the audit principles, where we say as well that the combined system review at the beneficiary level is the basic of our way of auditing, and it should be complemented by audit on transaction. And we open it up in a way because we say that it should be carried out by an independent auditor. So it's not restrictive, this should be part of the discussion as well. The only requisite, which is fundamental, that should be recognized independent auditor following the directive of 2006. What I wanted to say is extremely important because this paragraph could be really implemented in concrete. I would say maybe it's my personal judgment, but it's easier to get an agreement on that and the concrete implementation quickly and immediately, whilst cross-reliance, it's more complicated because there are many factors coming in. And this is quite open, this Article 48, paragraph 3, about the elements, about the criteria to decide when, whatever to introduce. So I really stress the importance of this. And with this, I think the floor is yours.
Good. Thank you, Marina. So Marina introduced the idea of the system and process audits as it's explained in Article 48 of the proposal for Horizon Europe. So this slide aims to dig into the details of our thinking process, but it's also elements to open the discussion further on how you see these system and process audits being useful. So in principle, the way we think of the system and process audit is a combined review of test of controls and test of transactions, as we say in the auditing profession. So the test of controls would require the Commission getting assurance that the internal control system of the beneficiary is able to prevent and detect errors. So we would look at issues as documentation of procedures, we would look at issues as proper segregation of duties, the normal test of controls checks. And these checks will be accompanied by test of transactions. So we would sample certain transactions and we would try to ensure that indeed the internal control system was able to clear those transactions as error-free, as regular, as legal, before going to the Commission. So in substance, we will be looking at the inherent risk of the beneficiary, the control risk, and budget category specific risks, because we understand that different budget categories have different risks. We will be looking in having one single product, which is going to be an audit report, with two parts probably, one part on the test of controls and one part on the test of transactions, but it's going to be one single report, and we will provide a combined results, let's say a combined review of the results. The results of such a review would be that the beneficiary is either high risk, low risk, medium risk, and then certain consequences would come after this categorization of the beneficiary, always keeping in mind being reduction of the audit burden. So if we move to the next slide, the objective of such an idea is first and foremost reduction of the audit burden. When we will do this SPAS and when we have a clean, let's say, system and process audit, in principle, we consider that these beneficiaries would not need to be within the next audit campaigns. We will get some assurance that we don't need to go back to them and have a look at them. So less audits, but definitely more focused audits, more deep audits. And as I said before, we rely on the internal control system of the beneficiary. It's important to talk about the timing because we said that we need to complement the system audit with a test of transactions. So we would need a cost statement. So possibly the best idea would be at the time of the first audit of Horizon Europe. It's an idea. And as I said before, what are the, let's say, consequences for the future audits? So, yes, we can move. Yep. So to sum it up, let's say, to see everything, we have three concepts here. The combined reviews is what I just explained, the system and process audits. We have a single audit principle, if I say, for joint funding. So once we have a project that is co-funded by two different programs, we should find a way that one audit would cover both streams of expenses. We wouldn't come twice to the same beneficiary. And as Marina said before, the possibility for enhanced cross-reliance. This is something that I think it's common benefit for the Commission and for the beneficiaries, cross-reliance among different programs. We have some factors of success, as we call them. It's very important that we need conditions equivalent between EU programs in order to have cross-reliance. Same eligibility rules, same systems. It's something that it's open for discussion. We definitely need to enhance our corporate IT tools in the Commission in order to achieve this. So we would need clear central repositories of beneficiaries, audit documentation databases that would be able to support such an element. And it goes without saying that we need to take into account the international benchmarking. So these would be either the International Standard of Auditing, INTOSAI is very useful in that respect, and any other, let's say, standards that provide benchmarking like COSO, etc. So that's all from me. I pass again the floor to Marina, and from my side, I'm very looking forward to a very open and fruitful discussion.
And thank you. In reality, the presentation is finished, but next slides, 2 slides, is because we thought, you can maybe change, because we thought it's good for the discussion to have some point for discussion, so we were thinking inside our services to just put the title of what for us should be the line to be discussed. We have many questions, just a listing, for example, scope of the SPA. It seems simple, but it is not. What do we want to include? Do we include, for example, internal control process are concerned, yes or not? What's about the multi-sites entities? What about we have common provisions with the EU, yes or not? So I leave it open. I don't want to put it's a question that we were asking ourselves, where we don't have straightforward answers, or maybe we have answers, but we do not want to impose our answers, and therefore we don't put anything there, just the title for discussion. Timing for, I give you an example just, timing for SAP A. We were thinking, when do we do? In advance, similar to LRE or these kind of things, or we combine with the first audit? I leave it open. We have our ideas, but I don't want to influence you. And feel free, please, to share whatever you think is the best. Validity of the SPA, how long and timing, what happens if the methodology changes, benchmarking, you were mentioning already before, to use SPA, for example, the International Standard of Auditors or others. Whatever conditions you believe are factors for success of SPA. And then the last, if you can turn it, please. Yeah. The impact is what I was mentioning before. What will be the impact when you have a sort of okay from the auditors concerned that the SPA, the system is a process are perfect, almost? What is? Shall we do less audits? There is a rules. Shall we establish a rules? The scope will be reduced. How? Where? These kind of things. Preference of the auditees, for example, size of the scope of ex post audits in terms of declaration of cost of participations, timing between 2 audits. You know, we have the rules of 2 years, for example, which exist also in the Article 48 in the last para. And factor of success. For now, I'm jumping to the cross-reliance. You know, one factor that should exist in the same eligibility rules. Otherwise, how could you do cross-reliance if the eligibility rules are different, but can be others? And whatever you believe is useful alternative. So it's a very open discussion. We put up some ideas there, at least that I suggested to keep in your mind on your screen or whatever, but just to guide a little bit and to structure the discussion, but feel free to add others or to tell us straightforward. And now is really listening mode. You are the master of this second part. I hope it was a clear overview, ex ante, ex post. Never forget there should be the balance between the two, and both contribute to the assurance, and nothing else. We just wanted to remind you the main principle, the continuity, the stability, and what is new and what should stress forward. Thank you very much, and thanks. That's it. The floor is really yours, and feel very brainstorming.
May I say something just briefly?
Yes,
Very briefly,
even.
Yes. I'll just speak very, very briefly.
The micro, I think I.
Because as Marina said, it's really much for you. But what they've exposed there is a standard audit procedure, as they said. It's new to us, meaning we haven't discussed it with the Commission yet, but we will discuss it with you in February. You're coming to visit us, so that's interesting. But one thing I would like to bring to the discussion is that it seems very inspired from customs. Let me explain. I'm responsible for auditing customs, and they have a thing called the Authorised Economic Operator, which sounds very remarkably like your system, which works very well. And under that system, the DG Taxud visits the large importers into the European Union and tests their controls. And if they are shown their systems reliable to make complete and accurate declarations of imports, then that authorised economic operator receives simplification approval, and when it imports goods, it has almost no controls. So vaguely, it's the same mentality. And I think a lot of the issues you raised about length, validity, timing, you can learn from the experience of DG Taxud with the AEO procedure. So that's what I'd like to say. And I'm looking forward to the discussion between the Court and the Commission in February on this issue, which does seem interesting. Thank you.
Thank you very much, because very good point, very interesting, and it should avoid silos among DGs as well. Yeah. When there is a good practice, just use it. Doesn't matter when DG. Yes, please, if you can say also who you. Thank you.
There we go, thank you. Barbara Freischem from European Biopharmaceutical Enterprises and Industry Association of Innovative Biopharmaceutical Companies. So before I really want to discuss, I wanted to ask you a question. You mentioned several times same rules of eligibility would for you be a precondition of cross-reliance on audits. Wouldn't a description of the auditees be appropriate to address that, so that if they progress from one stage to another, you could still rely on an audit rather than they must per se fulfill the same rules beforehand?
Thank you for this comment. Yes, it's open for discussion. It's the element that we would hoping to come up today. When we were thinking of cross-reliance, of course, we're thinking of cross-reliance also between management modes. So there we were talking about direct management and shared management, which things are different because the players are different. In direct management, as you know, we only have the Commission and the beneficiary, where shared management member states do play a role.
They have an agency.
Yeah, you have the authority in the member states who would certify costs, etc. But yes, it's an idea. Alignment of eligibility of rules in our mind is something that would be very useful. But as you said, the description of the processes could be. Yeah.
What I wanted to say also that when you have a program like a framework program Horizon Europe, must be a reference that cross-reliance is acceptable, and so must be reciprocity on this anyway. Also other programs, which is the case. In other programs, they should foresee the acceptance of the principle of cross-reliance, so should be reciprocity. I forgot to say, but it's logic, so I forgot to say. Thank you. If you have question or intervention, please. Please.
My name is Gudrun Holtmans. I work with DLR. I have a question regarding the scope of the SPA. You explained that one part of it would be a test of controls. But during an ex post audit, you already test the internal system. So we would be interested in knowing what is the difference exactly between what you already do and what will be done.
It's true that during a normal audit, the way we do it now, we have an element at the beginning of the audit, which is an understanding of the environment and a test of controls, as you said. The SPA will go much deeper. So the way we do now the audit is we try to have a good understanding of the environment of the beneficiary related to the cost statement, to the costs that have been declared. And the emphasis currently on our audits is more on the test of transactions rather than on the test of controls. I think if we go ahead with a system and process audit, this balance will go the other way around. We will put much more reliance on the internal control system of the beneficiary and less reliance or less burden, let's say, less testing on the transactions. We will focus more deeper in the system. Yeah.
Their internal system and guidance. Mm-hmm. Is that clear for you?
Yes, I understood that, but what then would be the consequence if you find out that the control system or the system does not fulfill your requirements?
Again, this is the purpose of the discussion. It's a brainstorming. But if, for example, I would say that we find that we cannot rely on the internal control system, so the result of the SPA is, I will call it negative, but it's not negative, it's something, then I think the audit campaign would continue as normally.
As it is now.
We wouldn't have more assurance, let's say, from this beneficiary.
Exactly. So the idea is to see whether, let's say, it's positive or negative. I call certification, I don't know how. If it is fine, okay, positive, automatically we know that our sampling will be lighter in future for the entity in numbers and in heaviness, let's say. If, unfortunately, it doesn't match, so we cannot say you're fine, and you say negative, but again, take this wording for what I'm using, we simply go back to business as usual. In that case, normal as testing, normal selection and normal simplification. So there is the normal business as usual as we didn't check the system, but we check the transaction per se.
Yes, may I just add, from the Court of Audit's point of view, we would say that you should be just in the hypothetical situation where you have been considered to have an unreliable internal control system, you as a body yourself should be concerned by that. And of course the Commission should be, would be if that was a hypothetical case. And I think the Commission would then identify these where you are falling down, and it would be in your own interest for two reasons. One, for your own organisation sense, but also because you would like to become a trusted operator. So the Commission will tell you where you're going wrong, and I assume it's for the Commission to decide this, but if you can then correct your failings, they would come back and hopefully reassess and remake the judgment. But so that's the way I would see it anyway.
To say, because I said it for the Commission, in principle, that's what we have in mind. Of course, we have to calculate as well our resources, because we will, I don't know yet, in the sense, it makes sense that if you, at least for me, that if you receive a certain negative from the Commission and then you do an effort, because when receiving the negative, we will say also why. So you know where are the little failure, but again, don't feel offended by my terminology, failure in your system. You know the points of failure, so you work on that, and then logically we should go back in X time to check the part which was not in accordance, and therefore you receive your okay. What we have to do as well is planning our resources, which will play an important role, unfortunately, as in every administration, in the timing, in the stepping, and these kind of things. You see my point. This I cannot commit to the Commission now because I don't even know whether I will exist. I hope so, but...
Thank you very much to both. Enora Bento-Privot from the European University Association. Obviously, universities are a very big player in this field, and the first beneficiary of Horizon 2020 currently. They also work with a very diverse portfolio of European funds, obviously, as well as national funds. And they are also audited entities at national level. Now, there is a strong interest from our membership, which we have consulted quite extensively on the topic of simplification for the SPAs. Indeed, there is really good potential there, and that sort of follows from previous attempts before of certifications and so on and so forth that unfortunately did not bring about the results that or matched expectations, let's say. So we are very happy to hear that there is really good potential there with the SPAs. Now, for it to work and to be attractive for universities, particularly the large players that have a lot of projects going on, the reward needs to be there. So indeed, the validity and the scope is extremely important, is an extremely important topic for universities. If you make the choice to go through such a process, which will be a rather intensive one, can you say with confidence that you're going to have more efficient processes and less auditing burden for the entire period of the program or the next 7 years? Can this be extrapolated to your participation in Erasmus Plus and other programs? Obviously, we have the shared management, centralized management issue, but these would be very important assurances to get for universities to be proactive in this. And indeed, it has to be a system of rewards rather than penalty. I mean, the wording currently says that this is an optional for beneficiaries. So if you, for certain types of beneficiaries, so there's lots to clarify there. If you make that step to go for it, it's because you believe that you can deliver efficiencies in your processes, both on the Commission side and the university side. So if you are classified indeed high risk at the end, then it needs to be something that you need to learn from and hopefully get guidance to improve. And then the question is what kind of timing until the next time that you can apply to show your improvements. Thank you very much.
It's a common reply. Okay.
So thank you very much for this comment, which I personally fully undersign. The decision to go for an SPA, it's an investment from both sides. It's an investment from the Commission and investment from the side of the beneficiary, because obviously it will be a deeper audit than a normal H2020 audit as we know it now. And I fully agree with you that we would need to have some assurances that if we go for this investment, then there are positive consequences for both the Commission and the beneficiary. In an ideal world, and this is what I would like to think of, is that this SPA can have consequences to other programs. You mentioned Erasmus Plus, you mentioned this is the idea of cross-reliance. This is what we are trying to achieve here. We go, we audit deep one beneficiary, and definitely the positive consequences or the positive results of this audit should be extrapolated to other programs. Now, quite often the devil is in the details on how we are going to achieve this, and this is something that we have been thinking internally in the Commission. We have been talking extensively with our colleagues in other programs, in other DGs, and we need to find a common understanding on that. Now, of course, in order for a beneficiary to accept this increased, let's say, effort to have the auditors there, there needs to be a buy-in, there needs to be something positive. So I am not able right now to say exactly what it is, but I can reassure you that our intention is not to invest on something without having positive or more efficient processes afterwards, not only for Horizon Europe, but to an extent possible extrapolate it to other programs.
And if I may complement, that's why we need your help in finding out what are the elements sine qua non, otherwise it's not efficient. And for example, you were mentioning timing, I totally agree. If we last 2 years at the analysis and you are almost in the middle of your of the program, it's the efficiency, I have some doubt. So there are elements that absolutely should be a win-win, an engagement of your side and on our side, but we need to discuss together now, once things are clear, to use this opportunity, because we need to know on your side what is essential for you as well. Is that good? Thank you. 1, 2, 3, 4. Yes.
My name is Martin de Jong from representing IATO, the Organization for Research and Technology Organizations. Like universities, we are a large beneficiary of the Horizon 2020 program. And let me state this up front, we are in favor of an SPA. The question is, who goes where and what do they do? I've seen the slides presented by your colleague, and in sketching the audit process to be performed. What I've seen is something that's already been done in our members' organizations, namely by the auditors when checking the annual accounts. They are checking the risk environment, they are checking the system, they're doing the same thing. So we have the risk that we are duplicating something that's already been done. And the question is, and I hope I don't insult anybody, the question is whether the CAS is able to perform such an audit. The rapid digitalization of our accounting systems is that there is no paper to be checked. So lots of audits, actions performed at our members' premises are checks on the IT systems, which need very, very, very deep knowledge of these IT copies and of the total accounting modules and systems and methodology. Check on IT system, on IT checks. So the question is, can it be done by the CAS? And when it has to be done by the CAS, well, it will be massive time consuming. And the question is, can we rely on real cross-reliance on audits, on an audit already performed by the auditor auditing the annual accounts, which is doing exactly the same as you described. I mean, it's correct. If you have a negative assessment, then you should be very worried because it would impact also your annual accounts. So it cannot be that the outcome of the audit is different, in my opinion. So what could be done is, I mean, the work is being performed by the local national auditor, and what could be done is extracting two, let's say, statements from this auditor, one for the annual accounts and one to provide the CAS or the European Commission with a report, but based on the same work that has been done and leading to two reports. That would be a real simplification and would be real cross-reliance on audits.
We share the reply. For one thing, first of all, you said when, you were mentioning when. We were thinking, but we're listening to you, that could be that in parallel to the first audit, so if your company, your entities, is selected on a normal selection standard basis, starting the first audit, in parallel, we start with the, embedded in the audit practically, we start with the system and process audit, which means at your very beginning of your participation to the program. First selected, you start, you have this kind of certification, I don't know how to call, not to create confusion. The SPA will receive an okay, plus all the rest of your living in the program will benefit of it. For example, it's an idea. You can say, no, it's better to do on request, so I don't know, there are things we should discuss here. Secondly, the competencies, I agree, I'm not sure we have internally. That's why it's very important to know what we want to do in concrete. But there is some freedom in knowing who is doing, so we can hire as well. We analyze the system and we know we can hire an auditor independent who respect the famous Directive 2006 and to use, as it is the case now, as it was mentioned, only 20-25% of the audits are performed, but the kind of contract will be different in the sense now we have a contract with the firms to perform audit, let's say standard, following our rules. If there are specificity, because it's different, the kind of audit, as you mentioned, of a system audit, the terms of the contract will be different. They need to have the expertise to be able to do that correctly, always under the guidance of CAS, but maybe it's not directly a colleague working inside my unit, but is an external expertise hired on that purpose. So, but if we don't know exactly the structure of SPE, what we are going to audit, is difficult to see who does what. So it's a little bit step by step. I think. But you can complement with the, you wanted to say?
Yeah, no, I mean, you mentioned very interesting and factual elements there. It's true that the complexity of different organizations is different, but as Marina said, nothing prevents an auditor to ask the assistance of another auditor in order to complete a task that we may lack internally the expertise. At the end of the day, what is important is that the Commission has assurance that the system is able to prevent and detect error. And I'm focusing a lot on prevent and detect error, on connecting it with the eligibility rules of the Commission, which are not always taken into account in a normal statutory audit that any organization would produce. So what we would need to ensure is that the cost statement is error-free based on the rules that we internally have.
Can I respond to that? Because I fully agree that we have the same goal. I mean, it's taxpayers' money, so we need to be clear on that. But I see now in the words that have been sent around that cross-reliance on audit is connected to eligibility rules, and I think that's. You should make a separation between this. Performing a system and process audit is on how the system and the accounting and the controls work, but and that's general in the system for your organization for all projects and customers and whatever. And I think in the end there's always a check or an audit on specific eligibility rules, and it always we have to provide some invoices or whatever to check whether this meets the criteria of the eligibility. But it helps when you put out the eligibility issue of the SPA. SPA is before eligibility comes up to, and that would help in the application. Yeah.
My name is Inga Benner. I'm here on behalf of IGLU. I have 2 points. One on the point you just made on reassurance for the Commission. I think it's also really important that this SPA provides reassurance for the beneficiary. And I wouldn't disagree with the point on that you just made on separating eligibility, but somehow what I would say, what most of the beneficiaries are would be looking for in this, is that the way they're interpreting the rules and how they're using their systems to implement these projects is right. So I think for this to be a benefit, it would have to provide a certain level of reassurance that what they're doing is correct and they don't come 18 months later to find out that all the personnel costs they charged they've done in the wrong way or using the wrong time accounting system. So that's a more general point. On the timing, I heard that earlier you were saying you might look at the idea would be to start around the first audits happening in Horizon. I have a comment on that. I would say that's fairly late in the process. I wonder whether if it has to be based on transactions, couldn't one use Horizon 2020 reports that were already existing? Because I guess we're looking at continuity of rules. The financial systems of the beneficiary won't necessarily change. My worry would be if this is on request by the beneficiary, I could imagine that a lot of universities, a lot of the bigger organizations will come straight away and say, yes, we would like to have this done. There might be a big queue of organizations who might actually be interested in having this done. But if they then have to wait, because the first audits never happen until 2-3 years into the program, it's a long time to wait for this actually quite nice feature that I think people will welcome if it's designed well. So those were the two.
So, thank you very much. So, first of all, thank you very much. That's exactly what I want to hear. That was our discussion internally, but we are here to hear what do you think. So we take note that could be advisable to advance such a type of audit. The second thing, why not? I will hear the rest. It was internal discussion. We said it's efficient, it's not efficient. Shall we do combine? Shall we anticipate? But we should discuss as well the criteria to be eligible to request, because it's open but you need to fulfill certain criteria. So we should as well try to organize our discussion as well to see which were these criteria. And secondly, I imagine it's very helpful. That's why I link to what I replied before. If you receive a no, how much time we give you to put in place the correction, how much time afterwards the Commission is eventually come to give such a certification. And there was a third point that we agreed, the first...
on the assurance that you're absolutely right, that the Commission gets assurance, but also the beneficiary gets assurance, and that's the main purpose of the SPA. This is what we want to achieve, certainty in both ways, that your system works.
I think it's a common agreement. You remind something that for me is the basis, because for you and for us. Good. So it's a point. So I hear that could be advisable to advance such a phase, but I like also the other people to express on this point. There was still two intervenants. Yes, please, three now. Please.
Thank you. I'm John Waters, representing the European Association of Research Managers and Administrators. So my natural interest is in the reduction of burden on the beneficiaries. Firstly, I'd like to, following on from the previous contributor, I think it's a very valid point that perhaps the first ex post audit is a bit late. For example, in the Horizon 2020, the organisation I work at had to wait for 4 years for its first audit. So that was already, that could have potentially been 4 years worth of errors. Thankfully it wasn't, but there is that potential there, and that's a risk. But the point I wanted to make separate to that is, I was just wondering, it's more of a question actually, is there going to be a consequence for a SPA and a positive SPA on the requirement to provide certificates on the financial statements? Is there going to be a link, or are the certificates on the financial statements still going to be required irrespective of the outcome of an SPA, even if the SPA found the beneficiary to be of low risk? Thank you.
On the timing, again, we take note. Thank you very much for that. The only caveat that we have on the timing, but it's in discussion, is the proposal of Article 48, which says that the system and process audits needs to be complemented by an audit on transactions. So there we need to have transactions in order to get an overall opinion. Now, on the impact on the certificate of financial statements, we have given a lot of thought internally. We haven't made a decision, and we would like to hear from you also. There is one caveat, which is a requirement in the financial regulation. So if I remember correct, I don't remember correctly now the article, but there is something in the financial regulation that we would need to respect anyhow. So within these boundaries, I think there can be flexibility and brainstorming, but the financial regulation prevails.
Yeah, always. Yep. Just one thing I didn't reply to you when you said, can we use or FP7 on Horizon Europe Horizon 2020 for the future? But they are different legal bases. So I don't know. I need to check with my colleagues the feasibility, because the rules of eligibility are different, and there are differences between the rules of eligibility, between certain rules at least. So I am not sure about that. It could be convenient, but I'm not sure. So I keep in mind, I will inquire.
Maybe just to explain what I was thinking is, I guess you're looking at, for example, personnel costs, how those have been accounted for. And yes, there might be changes to Horizon Europe, but in the end of the day, what I meant was the beneficiaries will continue with the same timesheets, with the same way of accounting, I guess, or similar for purchasing equipment. I don't see that there would be enormous changes on how that would be done, because that was the idea, to kind of not extend into the middle of the program, but maybe be able to use what's already happening.
You have a point, and the idea is to simplify, so just to reassure everybody. Okay, thanks. So if I don't, I think you were first.
Thank you. Massimo Busoli, I'm representing Brussels, the Norwegian University of Science and Technology, but here I am on behalf of Unilion, which is the University Informal Liaison Offices Network. It's an informal network, so I'm not speaking on behalf of all the members, but we collected some inputs from them. So this is just to clarify that is not a network position. There was an interesting comment we received about the cross-reliance, asking to link it to the nation's accounting systems. So making to the national accounting systems. So to simplify the life of big players, it's at national level, the research institute and university have already to comply with national regulation and are subject to even related external audits. So in principle, the question is if the Commission could try to set up a sort of cross-mapping between national acceptable rules and European compliance with the rules, so to make sure that at the end, the double accounting that is necessary to stay in project is simplified at maximum, because many of the things that are already done are also complying with the needs for the European Commission. So this is the kind of suggestion we received. Another is related to the personnel cost, where we got already a signal from the ECA about the fact that the current model is still leading to errors. So here the provocation that is put on the table is about asking to consider to declare the actual personnel cost based on usual accounting practices of the beneficiaries. So to try to consider this as a possibility to simplify and reduce the error rates. So these were the 2 points that I wanted to put on the table. Thank you.
On the first one, again, thank you. We take note. It looks very ambitious, but it would definitely simplify a lot the life, your life and our life. On personnel cost, I know that there is an intense discussion to further simplify in Horizon Europe. I mean, I don't have any concrete information. Maybe you know something.
We were discussing, I'm looking with my colleague of the legal unit, if you want to read, because it was quite a discussion internally in the CAS and with you about the use of the usual accounting practices.
Hi, hi. My name is Muna Staiko. I'm from the legal unit in the CSE. Indeed, there are a lot of discussions going around on the usual cost accounting practices. They touch for the proposal on Horizon Europe 2 aspects. One is the personal cost, and the other one, which is actually more interesting also for you, is the internal, what we call in Horizon 2020, and for consistency and continuity, let's say we kept the same name or the title because you are used to it, internal invoicing, where indeed there we go for a higher acceptance of the usual cost accounting practices of the beneficiary. Personal cost, we are building on the Horizon 2020 model, so it's mostly the same. Of course, there are discussions now with the Council and the Parliament, so I'm going to say the Commission proposal. Let's say in the end that I cannot say much on it. It's ongoing. But we are building Horizon 2020, and we are allowing also beneficiaries who have project-based remuneration to be able to charge their costs as they would have if they were working in a national project, in a national funded project. Like, let's take structural funds, for instance. They can use the reference if they are working in a structural funds, and if they would be paid for that work, they can also charge it to the Horizon 2020, to Horizon Europe in the future. So it's not a lot of novelty in this, but it's building on the fact that they are already used to it, it's their usual practice, they are doing it, they are charging to the other national project, so we can also, they can also charge it to the Horizon Europe project. And the second one, but it's not personal, is internal invoicing or internally invoice goods and services, as we call it, where indeed there we go again for higher acceptance of the usual cost accounting practices, in the sense that, and that comes from your experience, comes from the feedback we received, we will be allowing in these instances beneficiaries to also charge not only actual direct costs, same condition Horizon 2020, but also actual indirect costs. and this provoked a lot of discussion in Horizon 2020, and this actual indirect cost will be based on allocation keys, cost driver, proxies, whatever that name you are used to in that sense. Of course, no more indirect cost, the 25% flat rate. I mean, goes without say, because in Horizon 2020 you have the flat rate, but you don't have actual indirect cost. More or less the discussions, okay, are continuous. I noticed, at least I'm wrong, that it's a measure that seems to be welcomed by the council, but especially from the feedback that I got in several meetings I attended. It seems also a welcome from your part. Of course, we are going to discuss the details of the implementation, but this will be set out in the water grant agreement at a later stage.
Yeah, my name is Christian Jäger, League of European Research Universities, LERU. So of course we would welcome any measures to reduce administrative burden, but some points raised here I think are quite valid points. We shouldn't have to wait until too long into the program until we know that we may be a trusted organization. And especially, there should be a clear benefit, meaning, for example, reducing the CFSs. And if this comes 4 years into the program, and we've done lots of CFS so far, this would be, I think, a problem. So ideally, it should be on request, and it should be a certificate. And there should be a clear set of rules. We know beforehand that it can be prepared, this special SPA. And there's a thing also you've mentioned, external auditors can do this as well, meaning for the Commission. But I think lots of us in the room say, okay, auditors that have audited us so far, sometimes we even had to teach them how our organization functions, because a university is quite different from an industry, from a company. I think this should also be considered, and so thinking of and also stability of the rules should be important. We've heard about internal invoicing. We've heard about lots of other things that surprised us during the course of Horizon 2020. And if you say it's transactions as well, okay, given that point, but if rules for transactions change, there still should be enough trust left that we have the processes and systems to implement the changes. I think that's maybe a valid point, that it's not looking into the individual transactions that are right now, but maybe rules change, I don't know, but we have the capabilities to implement the rules set on us by Horizon Europe, then, as well as we have to implement the rule of our national funders or other organizations. It's not one set, as you also rightly said, of rules. We have sometimes to obey 2 or 3 or 4 sets of rules for the different funding organizations. Thank you.
First point, I think it's clear from the first discussion that it's a general agreement, the timing, the importance of the timing. I think we will not go into, I think everybody agrees, the soonest, the best, but in order to do, we need to have the element to do. As we said, you read in the article, the system you have, because you have in place, but we need to have some transaction to check, to testify, to test that the system effectively is exactly what we want. But as soon as possible, so not necessary to wait to the first audit. That's for me a point that I think everybody wants. The soonest the best, and therefore you can benefit from such a result or correct in case corrections are needed. I think it's clear, crystal clear to everybody. The second point, and thank you for reminding, because it's something I wanted to tell you, but I forgot. You were and I link with the recommendation of the court. We noticed from all the feedback we are receiving, and we want to benefit of the feedback of Horizon from many workshops I was participating for contacts with the beneficiaries or with you, representing some entities and beneficiaries, and with the court. There is still a problem with the firms, and therefore we put in place already, we started already and put in place, but the benefit we hope to see soon, several measures with the firms. Just to give you an example, I'm traveling and talking to them and organizing common training to the firms. In the sense now, when we launch a batch, because we work on batches for audits, but before launching a specific batch, we cover numbers of audit to a firm, whatever it is, doesn't matter. The firms are very similar, and I checked the statistics, I analyzed all the statistics, more or less is similar. The problems are similar to all of them. The time, the delay, junior auditors go into the place, your beneficiary knows better the rules than the juniors. So I understand totally. Therefore, before launching a batch, we organize an ad hoc training with the firms concerned, reminding, re-explaining the rules, interpretation of the rules. I insisted personally, because I'm going around and traveling to visit on the premises on the auditors, and the auditors told me it's a signal for the auditor firms. I'm not an auditor myself, I'm a lawyer, but they told when the client go and visit the firms, already is a signal that there is something that should be corrected. I didn't know, but I discovered, and in fact it is. So also the director is going and coming with me and with management to provide messages to the main 3 firms in charge of Horizon, and also to one closing the legacy of FP7. And there we reinforce the communication, and we said we are ready. For example, I'm organizing a meeting between my team, internal control, and the team of the firms doing the internal control in their firms. Because I said, for example, I'm not happy to pay, because again, it's tax money or the citizens, for a result that I receive is not what I expected. You tell me you have an quality control, maybe they are checking not what we are checking, maybe it's simple as that. So I'm organizing a horizontal meeting between my team, quality control, colleagues, team in the CAS, and the same quality control team in all the 3 firms, that they should talk to see what they're checking, why I receive bad quality, for example. Then I said, never send a junior officer new to a beneficiary, at least accompanied by a senior or debriefed in details by a senior. Then for the most difficult audits, at least in my judgment, I sent as well an auditor from my own unit to accompany, sort of silent auditor, in the sense the audit is performed by the firm, but my auditor is on the back to see the way they are performing. Now they have to signal as well to me in the system, because I forgot to mention, there are so many things that we should mention. The new IT system will help me and my colleagues, but as well we discuss in the cloud the beneficiaries as well, because it's in the portal, the audit process as well. So they know where do we stand with the audit, and it will be indicated as well when they go on the site, because I was astonished sometimes that there is a big lapse of time, and this I reply to somebody who was mentioning that the audit in the plenary takes too much time. I totally agree. I totally agree. I can't say anything. I'm astonished myself. So in the system, they should signal when they go on the spot. So for me, it's unacceptable if I sign a batch at a certain month that they wait 6 months to go on the spot. It is unacceptable. There are cases where the beneficiary can make difficulties because they postpone. But so there is a need of analysis of what's going wrong, what is delaying, and we are putting lots of efforts in this analytical monitoring on the process. But to reply to you, we are already putting in place measures, but it's quite new, all these measures of training, of discussion, on preparing the batch, on accompanying them, on reporting, and etc. So the benefit we need sometimes to see, because the feedback you have is of what happened last year or 2 years ago. Now I'm curious to see in a year time if it gives some result. Should you have any ideas? I always tell, and the ones who had other workshop with me, that I'm me, my colleague, we are the CAS is very open to all sorts of suggestions. And some of these measures I put in place is just your suggestion, some of you that gave to me in a workshop. So I'm very open. Should I forgot something, or should you have better idea, just communicate to us and we analyze, and if we believe it's good, we put in place. Just to reply to your, and as well to you in a way. It's a win-win. Yes, please, you wanted to. There is a lady behind you.
Oh.
One of the two.
Hello, my name is Fabienne de Dekker and I'm representing Alice. I have a question more related to large international companies. We are all there. The question is actually regarding to state aid rules. Do they fall under state aid rules? Do they get audited according to the state aid rules? Because it's still not clear. State aid rules are not really clear if it needs to be followed or not. We never had a clear response.
I would like to add something to my earlier comment. We've had earlier situations where where certificates were in place and to be provided. In I think it was in FP7 or 6 on COMUC, in Horizon 2020 on the LRI system, and in both situations there were rather big in the enunciation, but in the end only a few beneficiaries applied for the audit, and in the ones who applied for the audit sort of regretted that they did, because the work was enormous and the benefits were not that clear. I call upon you to see, well, what have we learned from these situations, and let's please not fall in the same trap again. So it's a call to learn from the past.
Yes, yes, and yes.
Yes, we are really thinking inside, and it's...
The statement, the intention is not to replicate neither COMUC nor LRI in the SPAs.
Yes, please.
I would just like to support this point. It's very important, and perhaps look into the lessons of the past to consider a process whereby you don't necessarily look at one beneficiary, but actually look where you have a national system in place that has been agreed on by the funders, the regulators, and the beneficiaries, and that is the same system everywhere. In a system, you can actually consider certifying or analyzing this system in one go. I mean, this failed with Austria and with the UK in the past, but there is really an opportunity there for enormous efficiencies and economies of scale. Thank you.
Stefan Dijks-Juka, representing the automotive OEMs in Europe. I very much agree with the statement on the efforts, because some of our members tried to do that and they had the same experience, so we would very much agree with that. And we are very happy with the comment that was made on the internal invoicing, because that is really important when you have large research infrastructure and testing equipment that you use, then this is a problem that the Commission is taking care of. This is very much appreciated. We would see now that in this new SPA, these changes are already considered, so that we not face a situation that when you apply for this certificate, that exactly this internal invoicing is then a problem in the future. Thank you.
No, it shouldn't be the case. Yes, it shouldn't be the case. And yeah. What is also maybe to add, not so much to this question, but as a general remark that we didn't really mention, we talked about the consequences and the validity. It's two ways, in the sense that in assuming that we have a positive SPA, and in assuming that we agree that it's going to be valid for X number of years, there is one important assumption, that there are no material changes in the system that we saw and we evaluated up until the date of the next financial statement. So this is something that we need to keep in mind on having mechanisms for you to inform us in case that the internal control system of the beneficiary materially changes, and mechanisms from the Commission to ensure, let's say, that these changes, first of all, we're informed on the changes, and secondly, these changes do not influence the SPA. So it's something that we have to keep on the back of our mind on the validity, let's say, of the SPAs.
Tell me if the question is not if this is not the right place to ask the question, but I'm not entirely certain what sort of benefits a beneficiary would have from undergoing an SPA. So what sort of current requirements do you see falling away in return for a positive SPA?
Okay, so we are still in the brainstorming session, but what we have been thinking, and it's going to be discussed also with the court very soon in February, is to find ways to consider a part of our population, in possibly those top beneficiaries who have been subject to a positive SPA, as error-free. So in substance, this part of the population, which we don't consider them as risky, we consider them as very low risk, will not be subject to the following audit campaigns. We have to think on how in practice we can do that, taking into account our statistical sample. But the idea is that once you have an SPA, a clean SPA, then we will not come back to you for the next X number of years requesting an additional audit to an additional cost statement.
And even the audit could be lighter. I mean, even when we come back, I don't know, 2 years, 1 year, 3 years, I don't know, to be discussed, could be lighter. We check less things. We have things that we give for granted that they are error-free. Sorry.
No, fully.
You wanted to add anything? No. Good. Because in principle, the time was 12:30, but we started a little bit late because everything has been delayed. So should you wish, we can take 10 more minutes and to conclude a little bit to finalize, because in principle it's over, but everything was late of 15 minutes, so we can recuperate. Should you have something to discuss? Otherwise, we try to... Yes, please. No?
I have an extra point that I was asked to address, which is not related to the overall discussion, but contributes to other aspects, which is the request about trying to be consistent in the findings. That's a problem which has been raised by several of our members, and they ask maybe to consider the possibility to, in order to optimize and harmonize the approach to audits and findings, to create more recurrent and in-depth training for staff and auditors, as well as clear guidelines from the Commission, mentioning that a nice example of common guidelines is the current indicative audit program that is applied in Horizon 2020 that can be maybe taken as best practice for the future.
To understand, the indicative audit program, despite the title, is very little indicative, and it is very much the rule to follow by every auditor, whether it is in-house or whether it belongs to an external firm. Concerning the consistency, I totally agree. There is always it's very important, fundamental, and that's why I was mentioning before. It was created 1 year ago, a little bit more than a year ago. The quality control team, who the team is checking all the draft audits. Doesn't matter whether performed by internal auditors, internal in the sense in the CAS, or by auditors of the firms, to make sure that the approach is the same, and they check the report twice before finalizing the draft, which will open the contradictory with the beneficiary. And then once taking into account the input of the beneficiary, consolidated the text, they check even a second time before my final signature, and means the finalization of the final report. And that's why I was mentioning before, it's important that the quality control team working in the CAS meets as well the quality control team of the firms, because maybe some of the problem could be that we don't speak the same language and should be need of clarification and need of the check that we have the same checklist in a way. So yes, it is an important point. We tried to tackle already more than a year ago. Now we will see whether the results we will see soon, because it has been created summer 2017. So it's really relatively new. But it is fundamental because for the beneficiary, doesn't matter the origin of the audit, it's the commission. So it's a point taken, and for me it's point for no discussion, is a need, is a must. Do you want to add anything? Okay, good. Any other issues about the scope of the SPAO? You have anything you want to, apart the timing, I don't touch anymore because it's clear, for me at least. The validity as well, we should see, and what can change the validity if there is changes, as you said before, inside your system.
I have one more question when you ask, give me the opportunity. The major simplification in auditing would be that the basic financial and guidelines between the different programs would be the same. And I'm not only talking about EC managed programs, but specifically on the regional funds. And we've just discussed this before, and I know your answer, that it's up to the member states, but it's a major problem to apply to the regional funds regulations for our members. It's becoming an even more problem, while the simplification within the Horizon 2020 program has really done a very good its job, and the complexity in the regional funds has increased. So it really needs to be dealt with.
I'm sorry, the Commission is proposing the program, but then they are discussed at Council level and as well at Parliament level. So we CASC totally agree on what you're saying. Makes life of everybody much easier if the simplification is everywhere. And I think it is in there in the Commission to simplify and to talk among DGs and among programs. But I will transmit once again this message, and you should transmit as well to the national authorities. Because you see my point, we make a proposal, but then everything is happening in the Council and in the Parliament.
We are addressing the national authorities, but I think as an expert on reporting and auditing, as the CAS is within the Commission, you could advise the Commission at least on not on eligibility, because those are different, but on standard reporting and auditing and accounting rules. Well, they should be the same for every program. I mean, it's just bookkeeping in the end.
He's courageous.
Absolutely. I mean, we're on the same line. There are discussions internally with DG Regio, with the structural funds. I mean, it's a joint effort to try to harmonize and simplify to the extent possible the rules. All this discussion on cross-reliance that we are touching here, it touches upon what you're saying, and to the extent possible, I can say that the Common Audit Service and the GRTD, in that sense, is definitely committed in moving this further.
Yeah, the proof is that the cross-reliance principle is not a novelty, but the first time there are in-depth discussion. So you see the movement there, I think. Any other, feel free to, if you have anything you want to let us. Yes, it's the last minute. So I thank, fine for you, happy, fine. They are my bodyguards. So really many thanks. If I may add one thing, should you have a brilliant idea of the input in future, just address to me or to my colleagues, but maybe as a sort of mailbox to me. Do they have my, in any case, the email of the Commission, marina.zanchi, and the email of the Commission. And because there's still time we are working on it, so you forgot something or you have a brilliant idea this night, feel free to address again on all these issues. Use also the title of the slides you receive, because we really care of your input and of your contributions. Many, many thanks for your very active participations, and thanks to the colleagues for helping in this. Thank you.
Thank you very much.
So welcome to this session on the lump sum project funding. I am very pleased to see that there are at least a few people coming and showing an interest, because as a matter of fact, the subject is rather interesting, because lump sum project funding is something that was not yet tested very much, and we have started with experiments, as you know, in Horizon 2020. And what we want to do in this session is to give you, again, at the beginning, a little reminder on how it was all conceived, these pilots. And then we are very happy to have some colleagues here next to me who have actual experience within these pilots. So we have the representatives of some of the projects that are now being funded or are in the course of soon being signed. And we also have the responsible Commission project officers, so we can get this experience from first hand. Of course, we don't yet have full experience for a project from A to Z, because these pilots are fresh, but we can already say at least certain things about how these proposal preparation works, how the evaluation works, how the submission works, how the grants are signed, and what is the overall impression of the beneficiaries and of the Commission officers on this experience. So I start going into the slides very quickly on why have we gone into all this, how it was done, what are the principles, and what is the state of play of the pilots. And then I will hand over and give the floor to the colleagues next to me, who will say a few words about the actual real experience. Next slide, please. So why do we do it? The main reason is that we all know, despite all the simplifications, the cost reimbursement is still very complex, and it leads to problems. It is error prone, and it is a burden for everybody. For first, all these cost accounting issues and the cost reporting, and then when we come to the ex post audit, for all the errors that our auditors find and the recoveries that we have to issue. So there is a lot of complication related to a cost reimbursement system. And in the lump sum system, all this would simply go away, because there would be no more cost reporting, and there would be no more financial ex post audits. So a major reduction of the administrative burden. And of course, the second aspect is that we focus our monitoring and the control from the Commission side from the purely financial aspects much more towards the actual delivery on the performance of the projects. We have tested this in this first pilot with two options, and the two options are distinguished from each other by the way the amount of the lump sum is actually defined. In the option 1, the Commission has set a fixed amount in the call for proposals. So the call for proposals was just saying we want to fund X projects of Y million each. And then in the proposal, the applicants had to explain the amount of work and the amount of effort and resources they want to apply in order to reach the goals and to, so to say, deserve this amount of the lump sum. In option 2, there was no predefined fixed amount. The amount was fixed for each project individually based on a cost estimation in the proposal. So the applicants had to go rather in detail in explaining to the evaluators and to the Commission what, in their opinion, all their efforts and resources would cost. And then there was an assessment during the evaluation, and on this basis, a project-specific lump sum was fixed for each project, and then for everything that follows option 1 and option 2 are absolutely identical. So, still, even if this seems to be a rather radical break with the past, for many aspects of the proposal submission, evaluation, but also for the running of the grants, we try to stay as closely to the very well-known model of the cost reimbursements, meaning we have not changed the evaluation criteria, we have not changed the scheme for pre-financing and for the later payments. We have not changed the conditions for the reporting and the reporting periods and the technical reporting. Of course, we had to put a bit stronger focus on the definition of packages that can then be considered as delivered and for which the respective lump sums could be paid. One should, however, emphasize that this is not procurement and it is also not payment against delivery, because this was one of the major concerns in the research field, that the results are never certain, and this is the very hard and character of research, that the result is open and even a non-result can be a result. So we don't pay against results, we pay against the fulfillment of sets of activities. So you say that you want to do 5 clinical studies in this area, and if you have done the 5 clinical studies, you will be paid no matter what the outcome of the clinical studies are. That is very important to say. And then we had to make certain concessions which in a certain sense bring or keep a certain complexity in the projects, which is related to the perceived risk by the consortia that they might suddenly become each a beneficiary responsible for a big chunk of the money if things are not delivered. So we had to break down the whole project into these work packages. For each work package a lump sum associated, and this lump sum also to be broken down by the beneficiaries in case something happens and in case there is a financial liability, so that each beneficiary would be liable only for the part of the work he or she or it had to supply. So that creates a certain complication in the management, but it was done based on the explicit request from the people concerned. The joint liability for the implementation is the same as in the cost reimbursement scheme, so it stays like this. And then I said, in these projects there will be no actual cost reporting and no financial audits. So the checks, reviews and audits refer to 100% on the implementation of the action. That means it can be a technical audit, but of course the checking and control and audit on all the other aspects of the grant agreement, like IPR, third parties, ethics, visibility of EU funding, will stay exactly the same as in the cost reimbursement. Next slide, please. So what is the state of play? We had 2 topics under one of them under the health societal challenge, the other one under the industrial technologies part, one of them for innovation action, one of them for research and innovation actions. We had also one pilot in a joint undertaking in Shift to Rail, and we have currently just closed the first cutoff date, a specific lump sum for the ERC proof of concept projects. Next slide, please. So, as I said, the experience is not yet on the full project life cycle. We have signed the first grants in one topic, and we are about to sign grants in the other topics. But we can already take stock for the first time to see what is the perception from the people involved on the usefulness of this pilot. And then we go on and see how we can possibly have further pilots. And I think, where is the slide with the few red lines? Yes, thank you. So I would now give the floor to the colleagues actually involved, and the suggestion is that we do it step by step. So we would start with the proposal preparation. And here I would in particular give the floor to the two colleagues actually involved in the preparation of the proposals, and tell us a bit what was your experience and how did you perceive it. Who wants to start?
Well, I guess
okay.
That's the push this button over here.
I think this one.
This one, okay. Well, so my name is Dan Larsen Finson from European Vaccine Initiative, or in short, EVI. That's better. Well, it was a bit funny story, I would say, if that's the right word, because after stage 1, we didn't really realize we were part of a lump sum pilot project. So when it came to stage 2, that's when we realized this is actually different. So that was really a point in time where we realized that we have to do something here. But that was fine. I mean, we're quite open to new ideas at EBI, so that's part of the initiative to appreciate new ideas. I would say one negative part of it was that we received a letter in June, beginning of June, I think it was, saying that we will receive additional information within a few days' time. And then week after week went, and I think it was 3 to 4 weeks before we actually got the information, which of course led to some confusion because we wanted to pass on information to our partners in the projects that we were submitting, and as we couldn't do that, we became more nervous and started pressuring us. And so, just to explain that EVI, we are an organization that coordinated quite a lot of projects together with partners across Europe and the world, and we work not only with the Commission, but also the EDCDP, IMI, and we're also funded by the Japanese government. That's one thing. But so we're used to have many different grant methods and grant rules and agreements and etc. But first we started to work with a proposal and together with partners, with Gabor, for example, here from Evolucure, and I think it went pretty smooth, if I'm not mistaken. And of course, it was some trouble with the Excel sheet. We were handed over the Excel sheet, and this is very different from the electronic submission that we've been used to so far with the Commission. It was sort of back to FP6 when it was a different kind of Excel sheet. But in the end, it's quite similar to what we are used to from, for example, from EDCDP, that we always operate with huge Excel sheets with a lot of lines and etc. So we are not too uncustomized to it. In the end, we had some trouble with submitting the proposal, because in the portal you couldn't actually upload an Excel sheet, only PDF. So that actually had to be emailed. I know you don't like emails, but so, but in the end it worked quite fine. Yeah.
Maybe just to react a bit on this. So this project was option 2, meaning there had to be a detailed cost estimation by the applicants, and this is the Excel sheet that the colleague refers to. Yes. And it is an Excel sheet because for this pilot, for the few projects, we could not invest in implementing this fully in our online system. So this is, of course, characteristics of this pilot. If ever we go for a full implementation, that will, of course, change. Thank you very much. Should we ask the colleague from the industry project to speak a bit about the submission?
Yeah, so the submission of the proposal, sorry, I'm Daniel Moss from TWI in the UK. We're an RTO organisation in the UK. And our project's been running for about 4 months now. But the original proposal, similar to yourselves, we weren't fully aware that it was lump sum funding. We knew it was a concept, but we didn't quite know what that meant, what the practical implications of that was going to be. So it was quite a learning curve going through the process, and actually, really the proposal submission was very much the same as a normal proposal for us, but it was once we got to the grant preparation stage, and that's something that I guess we'll talk about, is when we had the changes and noticed it from there. But because the proposal was written with a fixed cost element to it, we didn't have the Excel spreadsheets until a later date.
And yes, maybe Gabor, again, back to the health project option 2. So this was option 1, predefined lump sum, and we are now back to the health.
Yes, we are one consortium. So I'm Gabor from Evelicure. We are SME. I just want to add on that, yeah, of course, this is a learning curve and there were some technicalities here and there and some delays, but I think that's natural. And I think that overall it was the European Commission did a great job. And on a conceptual approach, we really welcomed and we were really happy to have the lump sum approach. And we would like to see it in to be a spread concept for future calls. We see the value in it. We see that it's much more simple and much easier to manage. Even the proposal preparation was a little bit more simple. But I think that, as Daniel said, the real value comes at the project management, contracts management, and especially at the end when you do the reporting and you get the payment and you lack the financial scrutiny and all the financial reporting that you can skip. Of course, internally you manage it and you monitor your own cost, but there's a very heavy burden which is taken out of our shoulder.
Okay. Thank you. Should we now go to the evaluation? And there I would pass the floor more to our people in the Commission because the evaluation is done by us. So who wants to start?
Yes, regarding the industrial pilot, the fixed amount came from the fact that there were already previous projects which had been building platforms. So we had some experience of how much investment there is needed, and we did an analysis on that and could then decide about the amount for the fixed cost for the projects that could be launched. Now, to the evaluation, the technical evaluation, there was nothing else than that. The technical evaluation happened the same way as it did or it does usually for other proposals or types of proposals. As you could hear already from the fact that the participating organizations were not fully aware of what this pilot involved, it was similar the case with us, the Commission officers and the evaluators, the people that we engaged in looking at the technical aspects of the proposals, of what is involved. And the outcome of the purely technical evaluation, process like it was and is practiced with other types of projects, was a few differences that were observed. One is that breakdown of activities was different. Consortia were trying to put the work packages to define them in such a way that they could get paid for management, for example, or for dissemination costs. They could get paid in all periods. Also, the subcontracting breakdown was a little bit more awkward, was the finding of evaluators, and also what they said in their, when we asked them about what did you find, what did you encounter as difficulties, potential difficulties, they say that there is a focus on the definition of the work packages. And what might be helpful is a FAQ document, fiche, that is supplied with the call documents that proposers become aware of what is required and how they should do things about that.
And on the health part, we asked Maria to...
Okay. First of all, I don't work on health, but I was closely following together with the colleague who cannot be here today this evaluation. So it was option 2. So I mean here the lump sum for the overall project was not set. It was a proposal on what would be the cost estimate by the project. So it was extremely critical, and this was done to ensure that the evaluators had obviously a knowledge on the field, a technical scientific knowledge, but also to have some of the members of the panel who had a really strong financial understanding of the topic. So there, the interaction, it was extremely important, and this came to a very in-depth discussions because, for instance, the proposal for certain type of cost, whether they considered that it was reasonable for what was proposed or not. So this made the evaluation really, I would say, more intense, if I may say, compared to other evaluations. But I mean, I think overall it was not difficult for the experts to come at all to a common view on the project, and they appreciated. They had to get information sometimes, for instance, on what were the cost of research, I mean the salary of researchers in different countries, and all that was provided according to statistics and available information to ensure that there was not a confusion on comparing what could not be comparable, for instance. This came to the situation in the end that because the lump sum was not fixed, in some cases, the final budget of the project was not the same as the one that was proposed, and this was clarified later on and in the moment on getting back to the project. I wouldn't say it's coming back to negotiation, but at least there is an exchange between the Commission and the consortium to inform what is the outcome of the evaluation and how to get to the grant. And what Erastus was referring to, the breakdown of the work packages and some costs like subcontracting and so on, it was similar because the concept is the same. You are paid for what you deliver, meaning that the logic of the work package is not the typical, or the concept of the work package is slightly different to what we normally have in mind. And this was, in the beginning, a bit complicated for the evaluators, but it came along when the days passed by. And I think all in all, the general feeling was rather positive. They were understanding themselves that it could be difficult for the proposer, for the beneficiaries to prepare it, but I must say that generally speaking, the evaluators in the panel were supportive of further testing of the lump sums.
Before we go into the general discussion, is there any remarks from anyone on the grant agreement preparation? What was special? What is the experience?
So the only comment I'd have on the grant agreement preparation was what we touched on was, we had work packages in their usual form, so the management work package, dissemination work package, and actually changing that so that you don't need the management work package because it's not something that we can deliver. So it's changing that outlook on it and a different viewpoint that we had during the grant preparation phase, and working with Erastus was good on that.
Yes, I mean, we are in the middle of the grant agreement preparation. One key issue for us is the advance payment structure. It's a balance. It's always a question if it's a standardized one-fits-all or you customize it. For us, it's a heavily front-loaded project financially, so we have a serious cash flow gap if you go with that, and that would be, so we vote for customization for sure, but I'm sure maybe others end-loaded financial projects would feel otherwise.
I just have one comment. When it comes to the evaluation, and because as Gabor said, we're just in the middle of the grant agreement preparation, but from evaluation to the preparation, the level of information I think could be a bit more transparent. How you evaluate, because when we submit, there's very, very detailed budget sheet, for example. And how do you come up to the idea that a certain budget should be changed in this way or in that way? I think that could be good to have, so you have a little more transparency around the subject.
Do I understand correctly what you mean is feedback from the evaluation? Why the experts have cut here or there, and what is the...
Okay. But also you mentioned, Maria, certain statistics that you used. I think that would be nice to have, for example, that you provide us that we use these statistics to evaluate your cost on this side, for example.
I mean, what I meant, it was just information which was given as background information to help the evaluators, to give them some margin of we are working between this and that, so that people knew that, I mean, we all know that salaries, for instance, because that's one of the most obvious costs or parts of the budget, they are not the same in different countries. So in order that they had kind of an idea, this was not saying this is, but as a background information, these are publicly available statistics, and part of them come from researchers that we have from other programs, and others that were also from Eurostat. So we try to provide as much information, but I mean, I think we take note of what eventually we can think in the future. And it's not that it was saying you have to apply this. I want to make this clear. The cost of an hour here is that, but to give some background of what could be.
Because I remember in FP6 when we were working there, because there was actually a table where for each country, what is the expectation of, for example, salaries, and there was a calculation ratio for each country that was, and we can use that as a sort of a guideline.
Yeah, I think point taken.
Okay, I think it's time to open the floor now for the general discussion. So who wants to come in?
I'm co-coordinator in HIA. I've been picked up to be a pilot. I just wanted to know how many experts you had for one proposal. Did you go for remote, central? How?
Well, our evaluation did not differ from conventional evaluations, if I may say so. So we use the same amount of evaluators per proposal like we do with the others. So that's, in our case, it was five different individual readings and individual reports, followed by a consensus meeting involving all five evaluators, and discussing and coming to a consensus view, which was recorded as the minute of this evaluation panel.
And if I may add, I don't have, because I was not the person in charge of that, but I think in health they use at least 5 evaluators, when no more. The thing was, as I said, very important to ensure that at least in each of the panels, which in the end it was a panel with different geometries, if you want, was at least 1 or 2 experts which had the financial background.
I would kindly ask if you could put the slide of the 2 modes so we all have them in mind. Otherwise, I mean, I have a bad memory. But I think one of the, unfortunately, we don't have information yet. But one of the interesting points of the lump sum approach is how it influences the project implementation and the project management. So I have some short questions. So in the case of the option 1, you mentioned that you, for example, the Commission used the same pre-financing scheme. So if you call it lump sum, why you don't give the whole money? Then why is necessary to split the lump sum per work package? Is there any, or if you tell the people to split it per work package, it should be necessary to give freedom to a consortium to actually reallocate money during the development of the project as needed without any amendments whatsoever, because this is how research works. You budget your project the best you can, and then you reallocate resources depending on the need in the duration of the project. So then short comments about the small dangers that big or small, depending on the consideration of everyone of the lump sum approach, is that if you, in the Commission I refer, if you limit or if you impose the condition that the work package is finished for all the participants to get paid, then somehow you are penalizing the people that deliver against the people that do not deliver, which is unfair. But okay, I mean, that will create a little bit of more selection of the fittest for delivering to form the consortium for submitting a proposal. But also another, I mean, a more serious consequence will be that applicants will start to build micro work packages with total incremental deliverables because they're based on money, rather than taking a risk to say, okay, this is a research project, so let's be ambitious.
I think you formally the pre-financing stays the property of the Commission. It is pre-financing. And then you would run the risk that we have only one, or if I understand it correctly, what you want is there is one reporting period and you come at the end of the project and you tell us what you have done. We would have nothing against this. But the people who have discussed with us this pilot had a lot against it because it is too much risk for the consortia. So they want to have a certain assurance and to get assurance in pieces over time, so to say. So that was one of the conditions for the acceptance of this pilot by our stakeholders.
This is put forward by any of the projects here?
Is this a risk for the consortium or for the Commission?
We were told when we had similar discussions in preparation for this pilot that this is a risk for the consortia, that they cannot bear. Because until they come to the end, they own nothing, zero. The pre-financing stays the property of the Commission. And then there's at least a perceived risk that when you come to the end, and you deliver, and the Commission says, no, this was not what we wanted, pay everything back.
Forget the concept of pre-financing. If you call it a lump sum, it's a lump sum.
No. Lump sum doesn't mean you pay it in one go. Lump sum means that the effort and the financial terms are coupled and they don't move. But you can do it in multiple chunks.
So this, I mean, we have fortunately or unfortunately, we have an EU financial regulation which sets several boundary conditions. And I think what you describe is a prize. There is a possibility to completely different ballgame.
Sorry, what I describe is the way that research is done. You have a project in research which you budget, and then you get your money, and then you start doing it. And then you may have periods of review, but nobody calls it pre-financing whatsoever.
Yes, but I mean we have other grants, and we don't get the 100% upfront either. So it comes in certain chunks, 50%, 30%, and post audit 20% after the completion. So I think it's a standard practice. And
it is a standard practice. Do you agree with that?
as long as I have the cash flow, I am okay with that. And that's what I was asking for, that, if it should be I'm okay with that approach on my side.
Okay, there are other questions.
So, Christian Eger from LERU, League of European Research Universities. Just one point adding to your point, you're not alone in this. You're with partners in the consortium, and you work with your money, other may do something else, and you wouldn't be rewarded the money in the end. I think that's a crucial point here. But another point, my question I actually have, I take it that none of you on the panel is coordinating the project. So from you, I somehow realized this is a lump sum project. And so I'm just wondering how you did agree on the individual shares of the budget in the two cases. And in one option, you had to meet exactly the budget proposed by the Commission. On the other hand, you had to agree somehow on the budget you will propose to the Commission, and you had budget cuts. And so one question, can you live with the budget cuts? And how was your relationship with the coordinator? Meaning, say, how much would it cost? Was there internal context between the individual participants, or was it one-on-one, the coordinator discussing with you, and you didn't know what your other partners threw in budget-wise?
So yeah, we are the coordinator of our project, but because obviously we're option one, we're slightly different in the fact that it was a fixed amount. I think, as I touched on earlier, the call that we wrote, the proposal that we wrote, was based on there was man-month effort put in there. There was work package effort tables all built in, and that was feeded back from all the partners at the time. So it was very much a different approach until we got to grant preparation, and we had to split the work packages out into lump sums. And so the initial proposal writing was the same as we would write with any project, really. But because it's a fixed amount, and we knew the amount up front, then ours was slightly different than your guys.
I mean, for us. Okay, thank you. So for us, obviously, the lump sum approach is based on estimates, not actual costs. So the financial scrutiny comes at the first stage, and it can be more stringent than the actual cost scrutiny because its actual cost is easier to accept, and that's when the financial experts are coming. Yes, there was a little lack, the clarity and the transparency of this financial scrutiny can be improved, as we said, and we welcome that. We got the budget cuts. And usually the lump sum, in a more commercial world, not necessarily in the world of grants, is there to also allow for risk management. And in this case, the risk management is out. So you have a estimated lump sum, and this is the effort, and this is the work package you have to do, and then you just have to live with it. And if your estimate and the financial scrutiny estimates are different, the financial scrutiny estimates will prevail no matter what, and you just have to live with it. And if you need more money, you will have to find it. And the same goes for the extra risk, which are unforeseeable things always happen. So that you just have to finance it by other means. But I think this is a luxury problem to have once you have 100% non-refundable support. So we are quite happy to do this, even if it comes up. And regarding the communication internally, I mean, yes, one of the other aspect of risk management was that the definition of how you define the work packages. You want to create as separate and as less than or decrease the interdependencies for other actors. So only you go in with the same work package with people who you know or you trust, or you try to minimize that one. So that's why you have much more work packages coming up, because that's a form of risk management, because once you're 100% done, then you get the money. As I understand, even if it's not 100%, it's still going to be up for discussion and evaluation by the Commission. So it's doesn't mean that you lost all your efforts and all those, but there will be a fair additional financial scrutiny on that, and that also makes sense from our end. And regarding and for our consortium, everybody came up with their own budget, because we were not competing against each other. We had to provide the budget, and then it was subject to financial scrutiny by the European Commission. So that's where the final and the real decisions were taking place. So if you made the wrong choice, then it was straightened out.
Dorte Dalsgaard from representing EATO, and we gathered the information for the research and technology organizations. We actually have a lot of feedback from them, which we would be happy to share with all of you. I just want to point out 4 main conclusions that came out from the RTOs, and one of them was, as you already noted, that the work packages are more split up than usual. And the number of partners in a work package, you prefer to play with the ones you know when you get financial liability towards each other. Then there are uncertainties regarding the contractual aspects. There are no procedures for the approval of the delivered work packages in the model grant agreement. And the liabilities between beneficiaries, there's like this default procedures that introduced with 18 sub-clauses. But yeah, there seems to be a lot of discussions also in the consortium agreement about how the liability goes. Then the third point is that the evaluation criteria for the deliverables during the project implementation still are very unclear, and I think it's unclear for the RTOs and the partners involved. But I think the fourth and main point from most of the RTOs, is from our discussions in EATO, is that it is way too early to conclude anything. We sincerely believe that more pilots are needed and more experience is needed in order really to conclude on this. We're now also discussing, proposal stage. We're not through implementation. What is going to happen? And we believe it is a little bit early already. So, but we are very happy to share the experience from the RTOs.
On your last point, I can only say we fully agree. We will need and we will have most probably more pilots, even before the start of the next program.
Just a small question. If you say the 2 options, will this mean that you will decide on one of the 2, or there will be a mix, or there will be specific calls with that the DEC will decide and other calls that the partners will decide? Yeah, okay.
We haven't taken.
Yeah, now that you have reminded this, I would like to ask the experts in the lump sum how your consortium agreement looks like. How many pages it is, how many sub-clauses of liability.
Basically, what we're doing in our consortium is we still use the usual DESCA template from the Commission and link it to the grant agreement. It's not that different in the end from Horizon 2020 or the early ones from FP7. So where we are today, I mean, it's still not totally complete, but it will be quite similar to what we've done in the past. But then again, we have a small consortium with only 4 partners, so it's not too demanding. Yeah. So it's not a big consortium in the
Yeah, that's not even. I would rather say that this is not really representative as a test for a lump sum approach. I'm sorry to say, but when you have a project of 10 partners and you subject the payment per deliverable per delivering the work package, then I wouldn't expect to have a consortium agreement thicker even than the annotated model grant agreement. And
yeah, a very good question. The consortium agreement was you know, as a coordinator taking that challenge on, it was a case of where do we start with the consortium agreement, like you say. So we did the same. We used the DESCA model and adapted it to best fit the needs of what we are. Of what we needed. So a very good question. But going forward, I think that would probably need some thoughts, maybe a new DESCA model for it, even on that case.
How many partners?
We've got
How many partners?
8, I think. Yeah.
So coming close to the 10.
Perhaps I can. I don't know the.
One should remark.
Oh, sorry.
One should remark here that in the option 1 call, we had also this cascading grant part implemented. That means that the 8 partners in this consortium are obliged to get in SMEs in order to help them, to train them on the technology. So they, at a later stage of the project, they will get in SMEs for innovation experiments. And these SMEs will be, I think, 2 per partner. So the consortium member number is going to grow.
Okay, thank you. In one situation, I don't know exact the number of partners, but this consortium did know what they started, namely a lump sum project, and therefore they came up with 18 subclasses on different default situations which could occur, and they managed to they organized this in the contract. This is what happens on administrative simplification for the Commission. But it's now being pulled into the consortium. This is what happens at the moment.
yeah, but it's because, in my humble opinion, it's because when you go for a lump sum approach, you have to go with all the consequences. I mean, you cannot kill a baby before it's born. If you start putting clauses of subjecting the payment to performance, of subjecting the payment to periods of payment, I mean, because otherwise you're creating an ectoplasm.
Well, the interesting thing is the work package is being delivered and evaluated. So, and since apparently the partners are not familiar with it, then this is happening in the situation. So this is where we are very anxious to see what happens in these kind of consortia, and we need more pilots.
I agree that there can be concerns, but we should also have in mind that in the cost reimbursement system, we don't just pay against invoices. The first thing before we pay is the same, checking that the work was delivered. So we do this today, and this is also one of the reasons why there are no new specific provisions or procedures or guidance on checking the technical delivery in these lump sum projects, because we think the technical assessment is exactly the same as it happens or should happen in the cost reimbursement. Because also for the cost reimbursement, the first decision is, was the work done, yes or no? And only then we look into the invoices. In the lump sum, we would look in the same, we will look in the same way into the technical part, but we will not look into the costs anymore. That is the difference. And can I ask you, how often was one of your grants amounts reduced because the technical assessment was not satisfactory?
No, but it's not, sorry to intervene, it's not, lawyers think in a different way than researchers. And for drafting a consortium agreement, you have to put the lawyers on the table. And the lawyers, for good or for bad, you can go into that discussion I want, are trained the whole career to think about the worst situation in life. For example, you were mentioning that one of your projects has cascade funding. Good luck, because the problem is that do the beneficiaries know, or they're aware that the risk of unperforming on the third parties is falling upon the beneficiaries? That is not even covered by the 5% guarantee fund.
They will have to know, or they will know by the time there is the call, which is then being carried out by the project, by the consortium. So these are conditions, and on the basis of these conditions, they will come in or not. This is, well, at least they go open-eyed into their fate, whatever that is.
In a big project called Attract on research infrastructures, the cascade funding is the main instrument, and even the European Court of Auditors was astonished that the risk of cascade funding is not covered by the Commission 5% guarantee fund. So
I look at the timing and we are already in the coffee break. I would suggest we take 5 more minutes and then we have 10 minutes coffee break left. Is there anyone who wants to bring in other aspects? So I think we have already covered some of it, consortium agreement, the risk, the work packages. So yeah.
Another aspect, all these aspects are valid, we've heard before, but just I think it's going to Daniel Moss, as you are coordinating an 8 partners consortium. It would be interesting about the geographical composition, to learn about the geographical composition of this consortium, as we're doing lots of things. I'm doing the same work and I'm getting paid less. So how's the balance in here, and do you think there may be some questions coming up in the course of the project saying, okay, please renegotiate the chunks of budget that have been allocated during the grant agreement process?
So in terms of the renegotiating of budget between partners, is that what you're saying? I think that happens quite often.
So let me please rephrase. I'm referring to the issue that researchers in the UK or Germany earn much more for the same work they're doing than a researcher, let's say, Poland, Czechoslovakia, Bulgaria. And from this point of view, it would be interesting to know about, I think at least for me, about the geographical composition. Where do the partners come from? And do you feel that they're stemming from this geographic distribution? There might be some points coming up where you say, okay, we have to renegotiate and not just as we do shifting bits of budget from one to another, but talking about endangering the project maybe.
So the geographical location of our partners is quite well spread. I think we've got partners in Poland. Sorry, I don't know quite off the top of my head, but we've certainly got two UK partners and then partners across Europe. France, yeah, there's definitely France, and our Israeli partner as well. So yeah, sorry, my mind's not working. But in terms of redistribution, I think our project is well set and is off and running. But I think all of these things are going to be found out as we go along. It's a pilot scheme, so I'd love to be able to give you a definite answer, but I think we're going to find out. And I think the point that was made earlier about needing more pilots is true. I think we need more scope.
I would like to bring up another issue. The heading of the information we got up front was use of simplified forms of cost. And it consists of lump sums, but also unit cost. And I think we fully missed the subject of unit cost, unfortunately. And within that, the use of usual accounting practices and principles. Mainly to the topic of allocation of cost into the unit cost. I think it's a major topic, but when are we going to discuss this?
You're right, the session is very much focused on the lump sums. For the unit costs, you know what we are doing today. We use them quite frequently. The whole Marie Skłodowska-Curie is a unit cost system only. We have special unit costs for clinical studies. We have the so-called average personnel costs, which are unit costs at the level of the individual beneficiary. And we have the possibility to use other unit costs even in the current setup with the current grant agreement. So there is a possibility. When it comes to this discussion on the allocation keys and what is the other word that is always used? Proxies. I give the floor to my lawyers' colleagues.
In this morning, when we talk about the Horizon Europe proposal, and the other discussions will be done also in the framework of the model grant agreement. I'm aware that today we are going to discuss allocation keys or topics. I think that was more a discussion for the audit part in the morning. But okay.
Unfortunately, it wasn't in the announcement of this morning's meeting, so I saved my topics for today. But I would like to say a few words because why I think it's important. In both the LRI assessment and Horizon 2020, the allocation and measurement was a huge topic, and we discussed at length with the European Commission on how to implement this kind of thing and what is measurement and what is allocation. In large research organizations with very good accounting systems and financial systems, we always use some form of allocation, which is intelligent, but still is some form of allocation. And was really denied in a number of situations, specifically in the LRI. So within the RTO community, there isn't much trust, so to say, in, we'll fix that out in Horizon Europe. So I think there is a call for some discussion on how to implement this.
Of course, we are going to have discussion how to implement that. As I mentioned already this morning, for the actual direct cost, and I think for most of LRIs, I'm looking also at my colleagues who are specialized on LRIs, you can already measure certain costs which are, okay, let's say, put in the LRI perspective. So if it is a direct cost for you and you can measure, you'll be always able to charge it at a direct cost. What is the problem is the change is for the indirect costs which are not directly measured and which are cannot be directly linked to the project. Therefore, That's where we introduced and we went a step further and in order to allow for the usual cost accounting practices, and we are going to introduce, and is specified also in the proposal as such, okay, allocation keys or cost drivers, so key drivers through which you can approximate and you can allocate this cost on the project. Now, how to implement these are ongoing discussions, and we'll have to see in the other forum than here maybe how to do this. And I think there are already communication and exchanges between us and you on these topics. So we are open for suggestions. And yeah, okay. Yes, okay.
Just one remark on this. This topic is currently also in the discussion in the legislative process for Horizon Europe. I think there are amendment proposals from Parliament. So I think we cannot take a position here now on this. Anything else? If not, then thank you very much. And we have a short coffee break, and then the last plenary will be downstairs again. Thank you.